What's up, YouTube? It's your boy Durka Chan. Welcome to the first episode of the SPY 500 Daily Recap. Today is May 28th. Here is the SPY chart for the day and after hours. As we can see, after hours, there is a big spike. I'm using Robinhood, and we are up 1.46% overall. This is because Nvidia had earnings, and they did quite well, so there's a pop. The entire day, it was down 3.5 points, half a percentage point, and pretty much everybody was just waiting for these Nvidia earnings to come out, and it looks like there's a big pop. We'll see how this holds into tomorrow's trading. After Memorial Day, there was a big pop due to the news, I think, of the EU tariff pause. So in this market, it's very volatile. Things change rapidly. Percentages change rapidly. As we can tell, from February to April, we had a huge swing, and then from April back to May, there's a huge swing. So that's why it's good to have it, level-headed. Don't panic. Just stay cool, calm, collected. But today looks like positive leading into tomorrow. Let's take a look at ChatGPT and let's see what it says. So Wednesday, May 28th, everything was quite down a bit during trading sessions, and then everything kind of popped up after Nvidia earnings. And the main concerns that ChatGPT says is Nvidia earnings, which we already know, so that's good. And then the thing that was weighing down the market as well was the Federal Reserve minutes. So let's dive in to see what those minutes are. All right, so this is the second thing that was weighing down the market. So the Fed Reserve released minutes from earlier this May, highlighting significant concerns about persistent inflation and rising employment risks, largely due to ongoing trade policy uncertainties. Yes, that is very true. A lot of these tariff changes are, again, on the fly. They're ongoing. Nothing is set in stone, so things can change instantly, and the market does not like that uncertainty. So at that meeting, the Fed maintained the federal funds rate at 4%, 4.25 for the third consecutive time, citing elevated economic uncertainty, from the tariffs. Again, just restructuring everything. There's going to be that time where things are just unsure, and it's a great test to see if companies can ride it out. But again, uncertainty is uncertainty. Market's not going to like it. Okay, key takeaways from the minutes include persistent inflation concerns. So nearly all 19 policymakers expressed that inflation could be more persistent than previously anticipated. Yes, so we'll see with Q2 earnings how all these tariff implications have on inflation. So this is largely a July, August problem that we'll see whether it is a problem or isn't. So again, trade policy uncertainty. The Fed noted that uncertainty surrounding trade policy and its economic impact was unusually high, prompting a cautious stance on future interest rate moves. Yes, so again, another roadblock in lowering interest rates. On one side, people are saying you should lower interest rates, but the Fed is trying to be more cautious, trying to lower interest rates when they see green all across the board, which I think is, again, depending on which aisle you are on, is whether a good or a bad move. Me, I'm pretty neutral. I will just ride the waves as it comes and just roll with the punches. Okay, economic growth and labor market. Fed staff reduced their growth projections for 2025 and 26 and warned of a weakening labor market with unemployment rate expected to remain high through 2027. So that is definitely scary to see. When there's unemployment up, that's when people start panicking. That's when spending cuts happen within families. So that's the last thing you want to see in a economy. Things are slowing down. That's usually not a good sign. So people will spend less, they'll save more, and try to ride out the storm. So yeah, that's a valid concern. All right, and lastly, loss of safe haven status. Officials expressed concern that the U.S. could lose its status as a global financial safe haven due to economic fallout from the trade war, as evidenced by U.S. declines in government debt prices, equities. So that I don't know too much about, but I'll take it at face value. But at the end of the day, it's a wait-and-see approach, as they say down here. And that's, again, mainly because of all the tariff fallout that has been going on, the restructuring of trade deals. That's always going to be a transition process, and the Fed is just playing it safe. So it makes sense. Hopefully there's, worst case scenarios don't happen. But overall, in terms of market reaction, I think it kind of ignored all of that and fell in love with the Nvidia earnings because we are still up 1.4% overnight. So we'll see how this will do. We'll see how futures is early in the morning, and then we'll see you back for another market recap. All right, guys, ciao.